my name is Pia De Seleni. I'm the president and executive director of the Global Institute of Church Management. We work to sponsor our flagship program, the Program of Church Management in Rome, which was started at the behest of the Vatican several years ago. We are in the middle of our 5th cohort and getting ready to start our 6th cohort, for which will start in September with 2 intensive weeks for executive sessions. Those executive sessions are open to people who want to come just for those intensive sessions, and as well, they'll be part of the certificate program. So if you're interested in applying, we're accepting applications now, and we have information on our website about that. Today, we're going to be talking about investing for Catholic organizations. And if you're like me, you come from an academic background and you're in a leadership role and you're praying that God doesn't call the equipped, that he equips the called. And so you're looking for resources. And I'm excited about our panel today just to have this conversation. One of the things that we teach in the program of church management, we teach the skills so that our current and future church leaders can oversee can know when to hire competent, usually lay experts to help. Because we know that a church leader isn't able to do everything. No one's able to do everything, but particularly our church leaders, especially those who are ordained, we want them to be able to fulfill their pastoral role and to be able at the same time to oversee and to hire, again, the competent expertise that they need. So today we're going to be focusing on in Catholic investment. If you would like to ask a question, there's a Q&A box down at the bottom of your screen to the right. So please use that. We're going to talk together for about 40 minutes with the panelists, and then we will switch to Q&A. And be sure and use the Q&A instead of the chat. The chat is, again, we want to hear where you're from or if you have a quick response, but the Q&A box is for questions. We will be, next month, we'll be doing our webinar series on managing the assets of the church. Will expand to Catholic media because media is a huge asset. For April, we will be live streaming our real estate conference in Rome, which will be the 28th through the 30th of April. So you can get information on that on our website. We're going to be sending out more details. So it will be both in person and live streamed, and that will move. Normally our webinars, you might be aware, are the second Thursday of every month. So this is going to change that date a little bit, but then we'll come back to our regular schedule in April as we conclude the session by talking about personnel, because that's another huge asset in the church. So today I want to welcome our panelists. We have, as usual, we are so blessed to have excellent panelists. We have Mary Brunson, who's here in California, is next door to me in Orange County. She's the vice president and wealth advisor. She's the head of investing for Catholics. And then we have Andreas Machnik, who's in Germany, and he is the director of the foreign clients branch for Pax-Bank, which has been in existence for over 100 years. And then we're joined by Matt O'Brien, who's in Philadelphia, and he is the president of O'Brien Green & Co., an investment firm. Matt also was just in Rome to teach at our intensive program. And so we're very grateful for his ongoing participation. I'd like to start by asking each of our panelists if you could tell us a little bit about yourself, and then also the one thing that you think is most important to advise Catholic organizations about. And again, realizing that many of us we don't have the experience that you have. We are, if we're not starting from zero, it's still miles away from where your expertise is. So with that, Andreas, could I just ask you to start?
Hello, everybody. Yes, my name is Andreas Machnik. I'm from Pax-Bank, now working 27 years for Pax-Bank, and my responsibility is for our customers outside of Germany because headquarters of Pax-Bank are in Cologne. And I'm married, 3 children. And yes, I've been working now with our foreign customers, as we say, so with the Universal Church for more than 20 years. And if you ask me what is most important for our customers, I would say it is very important to find the right attitude towards money or financial resources, because there are a lot of misunderstandings, some difficulties, issues. So I think that is important to find the right way to understand money in the right way.
And Andreas, so that was pretty tantalizing. Can you say a little bit more about the right attitude towards money and resources?
Yes, it means money has to be understood as an instrument, as a means to the end. It has neither to be glamorized nor demonized. You know, there are some misunderstandings in the church. You know, all know you cannot serve two masters, you cannot serve God and Mammon, or other sayings. So that people understand, first of all, that church also is an economic actor, that the church needs financial resources to do good things, to run their projects around the world, but that money has no inner value, that it is just an instrument, and that you have to handle it with respect, that you have to apply it for good things, and always with the Catholic values in mind. That's very important for me and for our customers, I think.
Thank you, Andreas. Mary, I'll turn to you.
Andreas, that was outstanding. I hate to kind of follow that. My name is Mary Brunson. I'm Vice President and co-founder of Investing for Catholics. And despite my background, Pia ratted me out. I am in Orange County. I'm not in Paris, Notre Dame.
Sorry.
No, it's all good because I want to talk about transparency. And in the interest of being transparent, I have to say that. Investing for Catholics is a division of a company called Index Fund Advisors. And I co-founded Investing for Catholics in order to bring an extremely transparent investment approach to Catholic organizations, specifically to bring a very low cost, very transparent investing program that is in close alignment with the Bishop's guidelines for socially responsible investing. Given that we are a US-based company, we follow the USCCB guidelines for investing. Andreas was also sharing that the Vatican is coming out with their guidelines shortly. So there are guidelines that we follow to make sure that our clients invest in a prudent manner that is compliant with the guidelines for socially responsible investing. When it comes to the most important aspect that for Catholic investing, I would say it has to be to have a single investment philosophy that is steeped in lots of rigorous data that's supported, that's understood, and implemented in a very low cost and transparent way. And this is very important because, to Andreas's point, these assets are of value for the church and they must be stewarded properly. And so understanding the investment policy or investment philosophy that you're adhering to is very critical in order to best steward those assets. And that philosophy, obviously, Matt's a philosophy, has his PhD in philosophy. My son is getting his PhD in philosophy, and I learn a lot about philosophy, and that's to establish a philosophy and to be able to defend it. And to defend it, you have to have lots of data. And so establishing that one philosophy is very key to lead you toward the best possible outcome.
Thank you, Mary. Matt, love to have you jump in.
Thank you, Pia. Thank you, Andreas and Mary. I think that what strikes me as most important for members of religious orders, dioceses, parishes, other Catholic institutions or charities for stewarding assets and overseeing financial assets are probably two things. One is to understand what the notion of fiduciary duty is, the notion that's codified in many legal systems around the world, in the United States, Europe, that's an aspect of the natural law and really flows from an understanding of the common good, and is quite accessible even apart from Catholic revelation. The notion that to be a steward and to be responsible for the financial assets that are owned by others, and in our case, we're talking about assets that are ultimately really owned by the faithful, and that are dedicated to the evangelical mission of the church. That we're all of us under a fiduciary duty to act in the best interests of the institutions whose assets we shepherd, and to recognize that fiduciary principle includes a duty to become a prudent expert, right? And that's what I think this program is part of, is that's helping people put themselves into a position where they can exercise and discharge the fiduciary duty that they're under, and to have also loyalty and to put the interests of the church or one's own ecclesiastical institution before one's own interest. And at the same time, understanding that when you work with the financial services world, you need to understand what the roles of each person who operates in a bank, in a brokerage, an insurance company, an investment manager. What is that person's role? Is that person a fiduciary? Is that person not a fiduciary? And understanding what that is in order to help you exercise your role. And I think in most cases, it's appropriate for the stewards of church assets to have a fiduciary lay expert who's hired to oversee or help oversee assets. It's very important once that relationship is understood and put in place, then I would say the second aspect, apart from the fiduciary notion, I think is most important. It's very simple, and it fits with what I think Mary was saying about transparency, and that's know what you own, right? Investing is much too complicated. It's more complicated than it needs to be, and it's often complexified by people and institutions who want to sell you something that you don't need. And so there's an imperative to always know exactly what you own and to know why you own it. And that these responsibilities are moral responsibilities that flow from ownership. Finally, I think that the church both has a lot to learn from the way in which the financial services world has developed very effective and successful ways to steward assets. And the church has a lot to teach the financial services world too, about what, say, true ethical investing could be. So those I think are the main points that I would stress.
Thank you, Matt. I just want to remind our participants that if you have questions that come to mind, we'd love to hear from you in the Q&A box at the bottom of the screen. It's been, to all of our participants, I love hearing this. It just reinforces the mission at the Global Institute, which is we want to teach current and future church leaders how to effectively steward the assets of the church for the salvation of souls. Again, why do we have these assets? Well, ultimately it's for the salvation of souls. So it's pretty clear what the end game is, and it's just a question of getting things to align. All of you spoke to some really almost things about which we have to educate ourselves about. What are some just go-to resources that you would suggest for people? Mary, you mentioned the USCCB guidelines. Are there any other go-to resources that you would recommend? Again, just so that people can educate themselves.
Absolutely. So Matt, well said, fabulous. You nailed it. Absolutely correct. So we looked to the guidelines for for investment selection. But we look to, in the United States, we look to the Uniform Prudent Investor Act, which is basically, I think, the cornerstone of a lot of what Matt was describing. All of those principles are laid out right there. It's the UPIA, Uniform Prudent Investor Act, a very important document for investment fiduciaries, and every individual on this in this webinar who is a fiduciary should familiarize themselves with that, because that is the standard that they should be holding themselves accountable to. And then any individual that they consider hiring or working with should also be willing to adhere to those standards and to put that in writing.
Yeah, I think that that's right. Looking at actual laws, the legal code is a very, it's almost too obvious, but we overlook it to just consult in developed legal systems. In Europe and the United States, there's often a wealth of information in just reading and understanding the legal code about what the responsibilities of an investment manager are. Another resource I would mention, I think is a great resource, is the CFA Institute. That's Chartered Financial Analyst Institute, which is based in the United States, but is really a global organization. And there are tens of thousands of CFA charters, people who've achieved the designation of a CFA and who work around the globe. There is a wealth of information, self-study curricula, at an entry level as well, not just the full CFA. The CFA itself is a more rigorous program than most PhDs or masters. When it comes to finance, it takes 3 years, 3 levels, 3 exams. The pass rate is in the 20% or so. It's too much, if you ask me, but the Institute itself, if you want to educate yourself on principles of finance and best practices, go to the website. Just, you can Google it. We can share it after this. It has a lot of good information. There are other professional organizations that I'm familiar with in the US that you can look at for example, the CFP board, financial planning board, which has resources that you can look at for institutions. Those are 2 things I'd mention, very practical. And one thing I did in my class that I'll share with this group if they want are some concrete examples that I've dealt with of charities requesting proposals from investment managers. What does that actually look like? I can give some concrete samples with the names blacked out to share, sample investment policy statements, things like that.
Great, thanks, Matt. Andreas?
Yeah, if you ask me about the resources, that was a question.
Yes.
There are so many resources, really, which came up in the last years. For example, these 2 documents from the Holy See, from the name is Congregation for Institutes, so for the religious institutes, the congregation. One is the Guidelines for the Administration of the Assets from 2014, and then you have this document, Economy at the Service of the Charism and Mission. Especially the second one, I think is very good because it shows the principles, how you should handle your assets and why you should respect them. I think it's a wonderful document. And then, of course, you have from a number of bishops' conferences around the world, you have very good guidelines from Belgium, from Austria, Italy, Germany, the US, so from France. And you can download them for free, I think, on the website. So I think there is not really a lack of guidelines or of good examples of resources, but maybe there is still a lack of understanding and of implementation. And of course, you can see between the different resources, there are slight differences, but not, I wouldn't say serious ones, because they have all the same spirit, the same intention. But I would say there are many resources which everyone could download, could take today and could take as a fundament to build up his own guidelines, if you want.
So Andreas, a couple of people are asking, could you repeat those names of the two Vatican documents? And then maybe could you tell us a little bit about the new document that's coming out, which dicastery is putting it out, and just generally what it's about?
The two documents that I mentioned are from the congregation, so the Dicastery for the Religious Institutes from 2014, the guidelines for the administration of the assets in institutes of consecrated life and society of apostolic life. This was the first approach. And then the second one, which is more intensive, in 2018, Economy at the Service of the Charism and Mission. And you can get it also in different languages, which is important, for example, for Africa, that you get it also in French or in Italian, and that is possible, in German even. So, and this makes it easier. So the new document, I think, is the next step. The name is Mensuram Bonam. So I had Latin at school, something like the good house or something like that. So it is about, it calls now on a very practical way that every Catholic investor should set up face consistent investment policies. And it proposes also a model or a roadmap. And it calls for an urgent implementation. So it clearly says it is now time. You cannot postpone it anymore. You have to do it now. That's, I think it's very, very, very clear and very important. And it also says, or let me say, the understanding is that no investment is ever morally neutral. And therefore, the Catholic investors should take actions by fully integrating the Catholic social teaching and the Catholic values into their investment policies. Of course, it's from the Dicastery for the Integral Human Development. And of course, they know that the standards in the country, in different countries, are different. So some countries, for example, in the US, they are more advanced. And they say, okay, we see this reality. However, you should now set up these investment policies. And the document also calls for an international cooperation to learn from each other. So best practices, for example. And I think that is a very good approach. And your church management program is maybe one way to do it. Yeah, and so Mensuram Bonam offers some kind of guidance and principles how to do it in a very practical way, and it offers also yeah, I think, for example, 24 exclusionary criteria, what you should not do, but it also talks about impact investing and other things. And last word, I think the document has 3 addressees, which are Catholic asset owners, which are, and this it expressively says, people working in the financial sectors every day. And the third is all people of goodwill, which are interested to learn from the experience of the Catholic Church. And in so far, this document or the implementation of Catholic social teaching in investing is seen as a new method or a new possibility of evangelization even. So it has a very broad understanding, but it is very clear in my opinion.
Thank you, Andreas. This conversation too brings to mind just an historical aspect of the founding of the program of church management. When we had been asked by the Vatican, when Santa Croce had been asked by the Vatican to start this program, an invitation was sent out by Cardinal Pell to many business leaders, asking them to come to Rome for a meeting to talk about, what should this program look like? And there was a question, should there be parallel programs? Because in some parts you have the developing world and the developed world, which are different cultural realities, different realities in general in terms of being able to what's the right word I'm looking for? Being able to conduct business. And we had a former attorney from a multinational company who said, look, I work for this company, and no matter where this company went in the world, its standards and principles are the same. And in layman's speak, I say, no matter where you go in the world, a McDonald's hamburger looks exactly the same. I mean, so yes, it's difficult, I think, in some places to implement these standards. Maybe Matt, if you could speak to this, you've just been teaching some of our students. What is the advice that you would give? I mean, you had a student from the South Sudan where, I mean, the reality is, it's just something that most of us can't even begin to take in terms of the lack of infrastructure and so forth. Do you have some words of wisdom or that you would give to people in terms of like, how do you even begin to start this process, particularly if your home country lacks the infrastructure?
Yeah, it's a difficult question, but it's an important one. I agree that it's appropriate to lay out universal principles and practices, and then the challenge is to figure out how to achieve them locally. One of the harder questions for investors and stewards of assets in the developing world can be how to safely custody assets. Who is a qualified custodian to actually hold your money, hold your financial assets? In the developed world, that's often a box that's checked very quickly, and there's not much time that's spent on it. But for a fiduciary and a steward, it's important to understand what custody is, and regardless of which environment you're working in, and how it's different from the actual selection and management of assets or brokerage and trading. And so a first step I think that every steward or investor has to understand or has to take is to really master the basics of what the different roles are in serving a portfolio of investments, whether it's financial assets held in custody by a bank or a brokerage, or real assets, a real estate portfolio, farmland, things like that, to understand these differences, and then understand the differences between asset classes, equity and debt, and to understand the way financial services works in your region, and to see if you're in a position where the church needs to be the leading light in reforming or establishing best practices, or whether the church needs to be learning from best practices. I think that what the resources that Andreas listed are remarkably important for conventional mainstream investors. If you look at what travels under the banner of ESG, or environmental, social, and governance, ethical investing, socially responsible investing, the mainstream secular resources that flesh out and explain and justify the nature of ethical investing are often remarkably thin and poorly worked out. That's an area where the church has a tremendous gift to share. Now, when it comes to actually implementing an investment portfolio, how much should you pay your manager? How should you pay him? Should you allow him to share in the profits of your returns? Do you let him? Does he take commissions? Is 2% too much? Is 1% appropriate? Often the church documents have nothing to tell us how to answer those questions, but no doubt everyone faces those questions. So in those areas, I think we have to look to the experience of some of the developed markets to see what best practices are to ensure that a manager that you work with, a bank that you work with, a brokerage, an advisor, is being compensated in the appropriate way. It is actually implementing the lofty principles that are sketched out by the church documents. Because we have to be honest, in practice, the church is often terrible at living out the principles that are sketched in the beautiful documents issued by the Vatican. So, we need to go much farther afield than Catholic experience only to actually implement true Catholic social teaching.
Thanks, Matt. Mary, could you maybe help us just give us some guidance again on a super practical level? How, well, on the issue of transparency, I think there's kind of a culture in the church, or has been a tradition of a culture that everything seems to be under the seal of confession. And this is, changing. There's a growing culture of transparency, but what kind of transparency should the church in general have about its assets towards the public, towards the faithful? And again, I'm going to take into account that in some countries this just isn't possible because of the instability in the country. But generally speaking, what kind of transparency can be expected? What's the transparency that we should be aiming for? When, I've done media interviews and I've talked about radical transparency, which makes church attorneys really nervous. So I'd love to get some insights from you.
Well, absolutely. There's that old adage, follow the money. So I think transparency starts with knowing who's getting paid, what they're getting paid for. Are they getting paid by someone other than the client? Are they getting paid for introductions? Are they getting paid out of investments? This is something that I encounter in my daily life with my clients. Are they making an informed buying decision, or are they being sold something by someone who is conflicted? Conflicted meaning that, to Andreas's point, you cannot serve two masters. As a fiduciary advisor, I have one master, that is my client, and I have a duty of loyalty to my client. And so hiring a fiduciary, understanding what they're getting paid, is a very important first step. How are they getting paid? And then secondly, what are they doing for you to earn that money? And what products or what funds or companies are you holding in that portfolio? The portfolio should also be transparent. You should understand your advisor's process for investment selection. Why are you including these particular assets in our investment portfolio? And what is it going to do for us from a returns perspective, from an expected returns perspective? And how do those assets conform to the guidelines for socially responsible investing, whatever that might be, for your particular region? And then also another point that's coming to the fore in a big way in the bishop's guidelines, that the new USCCB guidelines have called for, and also I believe the Vatican's document will also call for, is more engagement, more shareholder activism. What conversations are you having, or are your fund managers having with the underlying companies? Are they being held accountable for fair treatment of their employees, their labor force? Are they getting fair wages? Do they have access to decent living conditions and a paycheck that would enable them to actually pay for those types of living conditions? When you really start scratching the surface of what it means to be investing Catholic, it goes beyond just a binary decision to invest in or not to invest in a company. As a shareholder, we have an obligation to understand what a particular company we're holding how they're treating their employees, what their attitude is toward the environment, and making sure that we understand what those answers are and why we're investing in that company. So when you start pulling at these threads, it's a very straightforward process, but it can become complex. So having a fully transparent understanding and an open dialogue with your advisor, your fiduciary advisor, as well as understanding the rationale behind why you're holding what you're holding from a values perspective and from an expected return perspective is very important.
Thanks, Mary. Before we go to question and answer, I just have a question for another question for all the panelists. Again, following this line of transparency, I mean, assuming that we're talking about church organizations in stable governments, what sort of transparency should the faithful be able to expect from church organizations? Should they be able to see an accounting of the assets of that church organization? What's reasonable? And it's open to any of you that want to jump in and take a stab at this. I know it's a complex question, but it's very important, and it's coming up a lot from our participants.
I think on this subject, the answer is obviously context dependent, like every answer. So you can imagine a situation in a country with a hostile government or social strife. It might be inappropriate and imprudent for the church to publicly share information about its investment portfolio. But that is far and wide the exception, I think. And that's a debilitated state. It's one that ought to be rectified. It's much better, and in most cases appropriate, for church authorities to report, I think, very clearly and transparently and comprehensively about what assets they have, how they're invested, and how they've performed over time to the lay faithful, who are, of course, the primary sources of those donations. And it's a big problem, even in the developed world. I've said maybe especially in the developed world, that this is not done because the resources are there to do it. Many dioceses in the United States do not publish audited financial statements. Some dioceses don't have audited financial statements, such as the diocese, the Vatican. I think that's a big problem. There's a mismatch between, I think, expecting generosity and self-sacrifice on the part of the lay faithful, and not meeting that with the kind of commensurate transparency and open reporting, which is a very important discipline for any steward to be accountable to others and to be open.
Thank you, Matt. Andreas, please.
Yes, I agree to everything what Matt has said. I think it depends on the country, on the tradition, on the culture. For example, in Germany, all dioceses started to publish their balance sheets. But we all know there are still ways to draw up the balance sheet, to show things like that or that way. However, it's a good step. I think there are two types of transparency. And transparency, in my opinion, has something to do with the truth. So there's a transparency and an external one. So what am I willing to show to the society, to third parties? But it's also a question, what am I willing to show inside, in the church? And also there is a lack, in my opinion, lack of transparency, because sometimes the generalate in Rome of a religious institute doesn't know what a province here or there has got as assets. So also there is not a full transparency, maybe because of good reasons, I don't know. But I think transparency, there should be more transparency, of course, not in countries where there are problems, but I think there are not so many. And then, but maybe the first step is to reach a higher level of inner transparency. And of course, it is transparent. You cannot switch on and then you have transparency. That's not, but you have to it's a development, I think. But I think the time is right, or the time is mature to do so, or to begin.
Well, one of the things that I've been really encouraged about is just the anecdotal evidence from our students, and particularly students from the developing countries. And we hear sometimes, oh, these things can't be done in the developing countries. And then our students are going and implementing these best practices. And some of our hosts, we had Archbishop Muheria on one of our webinars last year. He's from Kenya. And I asked him about audits, and I said, how do you do that? And he said, I negotiate for them. So I think it's really encouraging. I don't think we can fall back on this excuse. I think to both Matt and Andreas, your point, there are very few places in the world where there would be such attention that church organizations can't follow these best practices of transparency. I want to switch to some of our questions, and we've got a lot of questions here. And again, as in the past, so we are building up our website, and we're catching up. We have a great operations assistant who's joined the team, and so we're catching up with the editing of the videos. We'll be sending out a link probably this week with those edited videos, and we're building up each page to have resources. So we'll be including the documents that have been discussed today, and as well, we're involving our panelists if they want to be involved in, blogging for us and so forth. Again, to provide as many resources. Some of these questions, if we don't get to them, we'll do our best to answer them on that resource page as we publish it. I would love to know, I want to address, here's a good question. They're all great questions. But here, this question, how difficult has it been to reconcile Catholic principles and traditional business practices? Are there times when the church has to deal with companies with questionable business ethics purely out of necessity? I think this is a great question. Andreas, you've had extensive experience working with international countries. Would you like to address that?
I don't know if I got the question right. Can you please repeat?
Sure.
If the church shall invest still in companies which are against Catholic values, was that the question?
Yeah. How difficult has it been to reconcile Catholic principles and traditional business practices? Are there times when the church has to deal with companies with questionable business ethics purely out of necessity?
Well, I think today it is different, our understanding from 20 or 30 or 40 years ago. Today we raise questions which we never have put on the table 30 years ago. I think today you have all the options to screen the companies, if that was a question, and to see which companies are against or our values or which are in favor. So I think today we have completely different means and methods than in the past. And this is a learning process also for the church. I don't know if that answers really the questions, but I'm not sure if I really got it. Maybe Matt can say a word.
Yeah,
sure, Matt.
I think the obvious way to take that question is I think the way Andreas went, which is how do you ethically approach your investment selections? Do you select companies that to what extent can you participate in being a fractional owner in a business that produces abortifacient drugs, or a financial services company that has usurious rates of interest, payday lending, things like that. So there's that question. To what extent are you forced to participate in those? Well, I think that as Andreas was saying, we have too much information now. We have tremendous amounts of information. So we can slice and dice an investment portfolio and figure out what our company is doing. We have the internet to make more informed choices and decisions. We're not dependent on third-party bank research in the way that investors would have been in the past. So it's possible, I think, in many cases, to avoid most bad companies. But what I would emphasize when I heard your question is there's a different way of taking it. When is the church forced to work with conventional business practices that are bad? Well, you can look at the companies you invest in, but you can also look at the financial services companies you use to invest, right? So what is the structure of your advisory relationship? and your custodian, your bank, your brokerage. In the past, in the United States at least, conflicted investment advice was harder to avoid, I think, and that's an arrangement in which the people who are hired to provide advice are compensated by you choosing the investments that they recommend. So they have a conflict of interest. Is that a necessary business practice that the church has to participate in? In some jurisdictions, it might be. It might be the only way in which advisors are compensated, perhaps. But I think that what I want to emphasize is ethical investing doesn't just apply to screening out bad companies or impact investing, choosing good companies to buy the stocks or bonds in, but it also includes the very structure of your relationship with a bank, with a brokerage, with an investment manager. Before you even make any decisions about what to buy or sell, the church, you have to assess that nature of the relationship as well.
Can I add
Yes,
something
please,
here?
Andreas.
Because
Please.
I think now I got the question correctly. And I can quote something from this new document, Mensuram Bonum, which I think is wonderful in this context. So it's about the parable about the entrusted talents. You all know it. So I quote from the document: "For the bold and wise servants that earned a return on the talents entrusted to them, it is obvious that their investment could only grow from participating in some kind of market or venture. Returns are in one sense earned by the one taking the risk, but in another also depend on a network," and this is what Matt said, "depend on a network of interactions involving other people, their ingenuity and creativity, as well as other social and natural resources." So I found that very, very interesting from the document.
Thank you, Andreas. Thanks for that sneak peek. I appreciate that. Mary, perhaps we could have you answer this question from Sister Elizabeth Cruz. She's, again, a PCM alumna. She did a great capstone. For the sake of time, I won't go into that, but she has a question here. When the investment portfolio is the principal source of financing to support the mission, there's always the tension between investing in more conservative assets, which give lower rates of return, and investing in riskier assets, which give a higher rate of return. What would you consider as a prudent level of this risk tolerance?
So thank you, Sister Elizabeth. So before we get to talking about a prudent level of risk tolerance, it's important to understand the risks that are worth taking and the risks that are not worth taking. And also making sure that we're not concentrating our risks. So we want to make sure that we're being sufficiently compensated for the risks we're taking. So not knowing what your portfolio is or is not constructed of, I would just like to say that developing an asset allocation model that cuts across every single style and geographic region will give you enormous and broad diversification, which will help dampen the level of volatility or the level of risk in your portfolio. By concentrating your portfolio to a small set of stocks to bonds, and or being in a specific geographic region, a lot of investors will invest almost exclusively in the US market, sometimes just US large market, and then maybe have a small exposure to international markets, which would be both international, developed, and emerging markets combined. That can be an unnecessarily risky portfolio. But when you diversify across many styles and geographic regions, industries, et cetera, you do a good job of dampening some of that volatility. So that's the first thing that I would recommend, that you look at how globally diversified your portfolio is. For example, the portfolios that we developed, even though they're screened for Catholic values, are comprised of about 12,500 companies across the globe. And so we've done a good job of diversifying away some of that short-term risk that might come from a single asset class. So look very carefully at that. And there is an enormous amount of tension, particularly in a down market when you're looking at funding your spending needs out of the portfolio. So when you look at very long-term historical data, we're talking about 95 years of data that you can have at your disposal. You can do a good job of characterizing the long-term expected returns and associated risks tied to those expected returns. And that'll give you a good characterization of what you can expect from the portfolio over the long term. So I just encourage you to look at some of those issues. What type of data are you looking at, and how diversified is your portfolio? And then you can arrive at an expected return and a level of risk that you have a good probability of achieving through that portfolio. And then you'll know, does this or does it not meet our spending needs? So when you look at a prudent level of risk tolerance, we typically see, I don't know why, Matt's probably seen this himself, but everyone seems to like that 60-40 portfolio, 60% stocks, 40% fixed income. But what is that 60% stocks comprised of? Is it geographic concentrated, or is it broadly diversified? These are the types of questions you need to ask. But arriving at a characterization of risk and expected return is key to know whether or not your portfolio is going to be on a path to give you long-term financial sustainability.
Thank you, Mary.
Can I jump in, Pia?
Please,
Just with a
Matt,
thought about
please.
that?
Yeah.
Yeah, I think that Mary's comments are very helpful because it's an occasion for showing, that there are different approaches. There are multiple viable approaches, I think, to stewarding an investment portfolio, and the one that she described, a kind of maximally diversified across different asset classes, is a perfectly viable approach. And when you take that approach, you need to focus on, especially on certain features of the portfolio. What are you paying to access all those? If your fees are always important, but what are the different vehicles you're using to access these different asset classes? And I think my own approach is different from that. One in which is relatively concentrated relative to that degree of diversification. And as I said, I think both are viable. One important way to start out is to sort of define the different notions of risk. So often risk is understood as volatility, the likelihood that things go up and down. But another way of thinking about risk is really just what's the likelihood of permanently losing your money, permanently losing capital. And when you take that definition of risk, which is sort of the one I would prefer in overall portfolio construction, that you might come up with a different answer about what's the appropriate level of diversification. And I definitely want to stress there are legitimate different approaches, but I'd say that the tension between diversification and concentration is, I think, ought to be governed by knowledge. Is that the benefit of concentration is that you can know what you own. The more you diversify, the harder it is to know what you actually own. And so that is the question to be asked in coming to a decision over how to craft a portfolio. And I would say that when you're specifically addressing the question of sort of how much risk to take, well, I often think of investment management as risk management, and I would argue that you don't necessarily need to take more risk to get higher returns. Is that perhaps a better way of thinking about crafting a portfolio is how do you manage and balance all the risks that you face so as to reduce the risks that you're taking. And one risk is that you run out of money. One risk is that you lose your money in a security that depreciates. One risk is that you preserve the nominal value of your portfolio, but its purchasing power is destroyed by inflation, right? So you take no risk because you purchase the safest assets available, US government bonds, and then you lose all your purchasing power over 10 years because, let's say, inflation eats it away. So I often think that taking the notion of risk, seeing that it's multifaceted, and then saying, how do you balance off these different types of risk often is a helpful way of getting some sort of fresh answers to the question, because it's hard. And there always is a trade-off between spending and funding current projects now versus hoping you'll get more in the future.
Thank you, Matt. And one of the things that I find with all of our webinars is that each webinar could be a series in itself, because there's just so much, we could go into these topics into such great depth. We're close to the end, and I just wondered if somebody had a quick answer. One of our priests asked, he's coming from a mission territory, excuse me, with very low income parishes. What would be the advice as to areas of investments for low income parishes? I mean, how do you start when you have very few resources in the first place?
Nobody jumps to answer that one.
I said to, I will just double down on what I said to Sister Elizabeth. You know, I work with multi-million-dollar accounts. I work with very small accounts, and they're all treated the same. We look at the level of risk that they're able to take. What is the intent of the assets? And are you able to fuel those for long-term growth, or are they needed for short-term liquidity needs? The important thing is that you just start the process. But having an understanding of the time horizon for those funds is really key. What is the intent for use, and what is the time horizon?
And I would like to add,
please, Andreas.
I would like to add not to take too high risks, and to go for a prudent way if you have only small money, but also to try to learn from others, because not everyone has to reinvent the wheel. I mean, when you maybe have a parish somewhere in a developing country which has only not much funds, then maybe you can learn from others. So I would say, be prudent, don't take too high risks, and go step by step and learn from others.
Thank you.
Because
Andreas.
that is the advantage of the Catholic Church, right? We are globally, and it's easy to find people in the same situation or to learn from others which are more advanced.
And it may not be appropriate to buy financial assets at all, right? Of course, is that we're all coming from a developed world perspective, and it may be appropriate, to stick to local land owning and some kind of cooperative endeavor, maybe, where you're trying to facilitate the enterprise of families of members of the parish through lowering their costs and for their own entrepreneurship, collective ownership of tractors, leasing out harder, capital equipment, something like that. That might be the appropriate approach for a parish in the developing world.
Great. I want to thank all of our panelists. It's been a great conversation, and your expertise means a lot to us. Again, we're going to be posting this this webinar online, and we'll include the resources, and we're going to turn it around a little more quickly than we have in the past because we've got the right help. I want to encourage you all. Our next webinar will be March 10th, and we will be talking about, again, this, considering the assets of the church. We're going to be talking about Catholic media because that's a tremendous asset. In April, our webinar will be at the live streamed real estate conference in Rome from the 28th through the 30th. So it'll be 2.5 days of live streaming. Will be there will also be recorded videos because obviously the time differences and so forth make it challenging for people to participate. And then our last webinar in May will be on personnel, because obviously there's the human quotient here, and in terms that's a major asset in the church. So again, I want to thank you. And if you're interested, our 6th cohort starts in September. So the flagship program in Rome is currently accepting applications for that. And we will also start with 2 intensive weeks for executives, as well as the certificate students. So if you're not able to be in Rome for the year-long program, but you'd like to come for an intensive week or 2, this could be an option. And again, we have information on that, connecting you to the flagship program in Rome on our website. So thank you for joining us, and we look forward to seeing you next month.